Welcome, everyone. This is Enough to Keep Going, episode 22. Tonight, it is our 22nd episode, and because we just can't help ourselves, it is Iglesias, Stamos, and myself here, DBq Hams, to talk about the most exciting of topics, and that is financials. It is numbers. It is the state of the industry in a week where the industry has seen loot box blow-ups and death threats on the most downvoted Reddit threads ever. And so as the state of the industry spirals over a topic that we talked about, let's say just a couple weeks ago, we're not going to come back to that topic because we have had that loot box discussion. We want to look at and I think there is a tie-in here, right, Iglesias? That there is a real tie-in between what companies' financial numbers are telling us and the decisions that are being played out in the games that we play.
Yeah, we'll definitely be talking about numerical reasons why every publisher seems wrapped around the axle about recurring consumer income. Apparently, is at least one particular articulation that one publisher is using.
Yes, right. I think that ties in both with a couple of our big publishers who both have seen success and have been, kind of called out on it. And so I think before we dive into that is our special topic this week. It is going to be about, this is the end of quarter 3, at least the end of October was, beginning of November, the end of October, beginning of November, there were a lot of conference calls, a lot of earnings statements that all of these public traded companies have issued. Some provide more detail than others. Certainly as we've dug through these, I have been surprised at how vague some may be, and also how convoluted trying to tease out the actual game aspects of some of these are as well. And so, we looked at this back in the springtime when it was the end of the fiscal year for a lot of these companies back in April. And so some of this may be familiar, but I think it is illuminating for kind of where we're at today within the video game industry as well. So, Iglesias, we're going to start with the publishers. We're going to start with kind of the big tent poles and work our way down, both North American, European, and Japanese third-party publishers as well. So I'm sure that, those of you watching this, those of you viewing it, I'm sure we may miss a few publishers as well, but we tried to hit kind of both the big names and the also-rans in the industry. So without going in any further, I'm going to dive in here with Sony, right? We're going to hit our big 3 publishers first: Sony, Microsoft, and Nintendo. And so in Sony's case, they have, right, hold on. I'm going to bring out my stack of papers here, right? I have come prepared. There are highlights and notes in the margin. It's like somebody has a master's degree or something and took this seriously. So anyhow, so in Sony's case, I think because of the way that Sony is structured, that teasing out the game division, it is one of many divisions within Sony Entertainment. There are multiple branches within there. Both their computer, televisions. They've spun some of that out over the course of the past couple years. But again, there are still a lot of big branches in there. And so I'm going to mainly focus on Sony's game and network services. Again, these are, I think the big piece here is that operating revenues were up 35% over the last year. That sales increased 35% as well for year to year. Only about 25% increase in sales after you figure in currency. So again, because of the yen and kind of the fluctuations there, but still relatively solid. And what they attribute a lot of that to is the strong PlayStation 4 both hardware and software sales. And we've seen this, play out as we've talked about the exclusives on Sony platforms. The Game Awards just got the nominees just got announced today, right? And so things like Horizon Zero Dawn, Nier Automata, all kind of follow up in there, and those are Sony exclusives. So a lot of this is tied to that 25% increase is tied to the hardware sales and their stronger software sales. Again, mainly within units, and not, as we're going to dive in a little bit further, not in kind of breaking this down between digital currency and physical copies there. The Sony piece stayed relatively light on that. So did Microsoft. Yeah, go ahead.
When they mentioned some of that strength is due to hardware sales, did they talk whatsoever about PlayStation 4 Pro, Vita, or PSVR?
So I pulled out the investors report on the Sony page, and I did this for all of the ones that I'll talk about tonight. It was not just Gamasutra's headlines, that I also went back through each of the financials, and in there, no, it did not break out. They mentioned strong hardware sales, but they did not provide any numbers or breakouts there. So in Microsoft's case, did they get into any more detail?
No, Microsoft is probably the least interesting, and honestly, that's partially because I don't think they had as good a story to tell. It's kind of interesting that kind of overall financially, I would say Microsoft was kind of weak, and that's kind of normally you wouldn't equate that type of performance with Phil Spencer, the head of the Xbox division, being promoted to an executive VP position. However, I think, and I always feel like the tale of what's going on at Microsoft is something deeper than the numbers. However, still, normally people don't concurrently get promoted when there's not concurrent financials to back it up. But I definitely understand. I definitely understand that for Satya Nadella that was more of a spiritual promotion for Phil than anything associated with the financial performance of the Xbox division. So were you? I'm sorry. So I guess I want to go back to you for the rest of the Sony report.
No, actually, that's all I have in Sony's, because it was relatively thin. So this is why I was trying to kick it over to you for, in this giant stack of papers, third-party publishers provide a whole lot more in terms of detail than a big conglomerate company that has multiple branches. So for Sony, while the PlayStation definitely has helped bolster their overall profits in terms of, and there was a CNBC story about this that I followed up on as well, is that the PlayStation, Sony's overall profits have mainly been driven by strong PlayStation and their games and network division. But again, it is part of that larger branch. So.
Well, and it's interesting. And so this first segment will kind of be a little bit of hot potato because I will pass it back to you almost as quickly to get to Nintendo. But it's interesting. So that was the tale of the tape for Sony 4 years ago. I'm sorry, 6 years ago. So end of 2011 going into 2012. And I think their fiscal year is one of those that ends at the end of the first quarter of the calendar year, I think. So that year was the year that you had the major PlayStation Network hack. However, you'd also had very strong performance in the games division. You had, I think this was just as is it? And I keep getting them for is it? So Yoshida is the one who took over as CEO, right? Yeah. So
Shohei Yoshida, yes.
Right. So you had the big PlayStation Network hack. At that time, the network division was in a separate cost center than the gaming division because they were conflated with a lot of their PC business and the fact that things like EverQuest and that whole gaming network was being run separately from PlayStation. This is also back in the years where there was a lot of infighting and lack of cooperation. And coming out of that year, this was also the year that TVs had been all flipped out about doing 3D, and that had tanked. So it was the same tale, right? Their PlayStation division was their strongest performing division. The TV division was in very dire straits, and they were about to kick Vio to the curb. And so there was a lot of news about how the gaming division had performed financially because it was the only good news that they really had to report. So I guess I feel like this year, with it being very small on details, is maybe because that's now been going on for a while, and the strength of PlayStation is kind of obvious. with the nearly 2-to-1 lead that theoretically they hold over Microsoft right now in terms of units deployed to users. So over to Microsoft. So their gaming revenue increased 1%. And that's 0% in constant currency. So I don't completely understand constant currency, but I think that is after in inflation correction and some change in accounting reporting rules for the SEC. Their revenue increase is actually flat with corrected dollars. However, so that's overall across the division. So here's a perfect example of when companies break out things when it makes the news story better. So if you isolate that view to just software and services, those two segments within the games division had a revenue growth of 21%, and that's actually pretty amazing because when you think about when you think about separating those two, you have generally what you would term weak hardware sales in comparison to Sony, while concurrently you have a pretty large degree of growth in software and services. Now, you said PlayStation's revenue growth was 25%?
Yes, after corrected currency, yes.
Right. Now, that's mixing their hardware, software, services, including their network services. If you take away the hardware thing, Microsoft is almost equaling their growth. So clearly, software is good. Xbox Live subscriptions are up, and that's good. I guess. So
wait, can we go back to the equaling their growth, right? I think one of the things that I know that I'll talk about a lot is the percentage of growth rather than the overall number, right? That because, as you said, that Sony has almost a 2-to-1 advantage, right? That they're the scope of their income, their revenue is drastically different, but in terms of the percentage growth, that's a comparable piece.
Right, and I would argue that generally when we talk about Wall Street stock market investors, that's what they look at is the percentage growth.
It's what's that change?
Right. So and that revenue growth is up to 20% in constant currency, and again they say, basically the offset is due to lower hardware revenue, but that's still very impressive.
I think the thing that's interesting and impressive about that is one of the stories that I read coming out of it is the strength of their subscription services, right? So Xbox Live, which, again, assuming that the majority of Xbox owners have, but then also Game Pass. I don't know that they've released solid numbers for that, but I think that in a year where the news story and the sales have played out that there's not a lot of strong first-party Microsoft titles, right? That if we're looking at Q3 here, we do get Forza because it came out at the end of September, so there would be some there. But other than that, if they did year over year, you had Halo Wars in the beginning of the year, but not a whole lot of other first-party Microsoft games. So I think that really does lean on the strengths of their subscription services to help carry that load in a year of software.
Yeah, it'd be interesting if we had more numbers. I agree with you in terms of where's the center of mass, but I think the load share between games and services has to be. I don't feel like software is almost zero and it's all services because you're only recapping that. In general, if we're primarily talking about Xbox Live, you're only recapping that once a year. So I think my sense of it is that this reported theme that because there's not a lot of Microsoft first-party games that therefore they're not doing well. I don't think that's the case. I feel like with numbers like this, people have got to be buying games on Xbox. They've got to be doing digital downloads, and they've got to be whatever the content is, whether it's first-party or third-party. People have to be consuming it, and they've got to be doing microtransactions, which we will get into later.
Yeah, and I think that plays out. I saw that play out with a couple other third-party developers as well. Is that they mentioned the long tail, the back catalog, strong sales of their back catalog, and so right. I think that plays into what you're saying here too.
Right, and just to wrap up Microsoft, so gaming revenue was up. Gaming revenue of $1.9 billion was up 1%. So there's your number for the 1%. Of course, Microsoft is looking forward to the launch of Xbox One X or Scorpio, which just occurred a few days ago. and hopefully that will increase their bottom line for the next reporting quarter. Again, offsets of lower hardware sales with an increase in software and services, and it's overall underperforming because Wall Street had been looking for one. Oh, no, I take that back. So actually, it's even more positive tale. Just if you well, it's a little more positive. So Wall Street punishes people for bad predictions, even if your bad prediction was lower than you actually made, because what people are looking for is consistency and good guidance to guide their investments. So analysts had been looking to $1.64 billion in gaming revenue. They got 1.9. I didn't look to see how their stock price was affected, but overall, for people already invested, overall good news story. And that should be it. I want to mention one other thing. It's a way off topic, but I want to mention it. I should have mentioned it when the show started because it's literally breaking news because the word just hit about 45 minutes ago. If you've been looking for the Razer phone, it is available for pre-order now over on the Razer site. My email for my pre-order just came through at 2 minutes after 10, so 45 minutes ago, about 30 minutes before we started the show.
Nice. Thanks for the public service update there.
For Nintendo.
So Nintendo, in true Nintendo fashion, is not strong on details and specifics, which is okay. But as you said, Zeus, talking about consistency and guidance, that Nintendo, the story there is that they are looking at an operating profit guidance of 1.1 billion. So again, this is profit. This is nearly double their targets that they had before, and the targets were just shy of 600 million. So this is good news in terms of Switch sales. They've increased their expectations for their fiscal year returns, which was previously at 6.6 billion, and they've now estimated it at 8.4 billion. So in terms of projections, in terms of guidance, that they are looking strong. And that's about as specific as Nintendo gets. So there are some other some interesting nuggets that come out of their investor PowerPoint slides, right? So this is they go through, and it is a good 12 pages of PowerPoint slides that talk about a lot of feel-good stuff. But there are some really interesting pieces in here in terms of overall projections and performance in terms of hardware and software. So one of the things that is talked about, right, is consistently there has been one of the big reasons why these projections are up is because of the strong Switch sales. And so there is a US-Canada console sell-through for the first year after release. There's a nice chart there that shows how the Switch is tracking comparatively to the Wii U and to the Wii. And so, which is interesting because the Wii, as it was such a phenomenon, that the chart there, it really kind of continues to grow and almost at a 45-degree angle, where the Switch right now is charting under Wii sales. Again, that's not necessarily a surprise, but it is almost already, it is well projected to double Wii U sales within the first year. And again, that matches projections because in these estimates that the Nintendo Switch is estimated to surpass the number of units sold within its first year that the Wii U sold within all of its life cycle. So,
right. So are they still predicting? I think the last things that I saw was they were predicting like 30 million unit sales into next year, or by the end of their fiscal year, I thought.
I don't know that it was as high as 30 million. I think that I'm seeing 14 million. Expects to sell 14 million unique units within the first year here.
Okay, all right.
So, which again puts it above the Wii U, but not nearly at that high of trajectory. One of the other interesting pieces here, there's Nintendo Switch console use. There's a nice graph. This includes Japan, US, and Europe, and it kind of shows the growth, but it starts to plateau, right? It shows peaks and spikes with the launch with Mario Kart 8. It actually kind of dips when ARMS releases. It was in a valley there. It starts to grow back up when Splatoon happens, and then it's been kind of plateaued since Splatoon about a month after Splatoon. And so I think what this doesn't reflect is what happens after Mario Odyssey. But again, it shows kind of that stabilizing of use. The other interesting piece here, again, as many other third-party companies are talking about digital sales, Nintendo does talk about that their second quarter sales were the highest ever during a 6-month period for download sales. So again, they're following along in that industry. Trends. There have also been a little bit of one of the big news stories that came out on a variety of gaming sites after Nintendo's reports were the comments about Super Mario Run. You know, that the comment in here, it's in the PowerPoint that we have not yet reached an acceptable profit point. We have learned a lot in terms of game development and deployment that we want to take advantage of moving forward. So Super Mario Run's been turning a profit, but not at the level that they had anticipated. They show a weekly user chart here that shows obviously a spike when it's launched, and it kind of really valleyed out into the remix kind of update that happened just in September in terms of adding additional levels and additional modes, and it kind of brought it back up about half of the way back up to where it was at peak user base. One of the other pieces here in terms of mobile Nintendo stuff is the Fire Emblem Heroes, right? That while Mario is underperforming, Fire Emblem Heroes is on track to meet both its profit and objectives in projections. So they break it down, both Fire Emblem Heroes, right? Because this is the mechanic of continuing to be able to buy heroes to really move into that microtransaction model or buy the chance at heroes, right? But one of the other interesting pieces is it shows sales per month within Fire Emblem Heroes, and that it started off within the first couple months predominantly in Japan. 61% during the first month were Japan sales compared to 39%, and now in September it is at 46% only in Japan, and so it's starting to stabilize out with 54% overseas. So the kind of long tail of Fire Emblem Mobile is that it's continuing to grow its audience outside of where it started within Japan, and so I think that is another good sign for kind of the longevity of that mobile platform there for Nintendo. They do talk a little bit about 3DS sell-through rates on 3DS and software sales. Software sales on 3DS are about where they were within 2017, and not a huge actually a little bit down, but not a huge amount down. And a lot of that has been because in Japan, the Dragon Quest 11 game came out over the springtime, which created a huge spike in both 3DS hardware and software for Nintendo. And so that was kind of a bright point within the 3DS. Again, a relatively stable chart here on US 3DS sales, that their hardware ends up being, right now they're tracking about where they were in 2016 for the 3DS, which is interesting given kind of the end of that system and where things are at. So those are kind of the takeaways that I found, both a little more specific than just general feel-good pieces, but also kind of gave an idea of Nintendo starting to kind of move in within this first year here into the mobile market and what their successes and struggles are.
Yeah, so I guess I want to mention, so much ado is made about the launch of Super Mario Odyssey, and it arguably deserves it. I don't want to give short shrift, though, to the Bethesda games that dropped this month, or dropping this month. So Skyrim, Doom, and is there another one, or are we still waiting for Wolfenstein? I can't remember.
Wolfenstein comes in the spring, so it is just Skyrim and Doom.
And then LA Noire, which is that a Take-Two game? Yes,
that is a Take-Two game.
So a lot of us are saying, a lot of Switch owners and fans are saying, it would kind of be nice if the Switch was almost like the Atari 2600, where like every game came to that system, and some played better than others. So I think there's going to be a significant and positive impact from those. I won't call them more advanced. I'll call them a different style of games landing on the Switch that are more akin to things that we're accustomed to seeing land on PlayStation and Xbox. So I think that'll give them a positive bump as well.
Yeah, I think so. I mean, hopefully, and this is where I will come back to this in the Ubisoft, but here's a little tease that in their Q2 breakdown of platform sales, that PlayStation 4 was at 31%, but Xbox One was at 20%, Nintendo Switch was at 19%. So again, it's selling about the same as Xbox, and so I think if you think about the Bethesda games, the Take-Two games, the Ubisoft games, the third-party games, if they're hitting sales numbers that are equal to Microsoft in terms of parity, I think that bodes well for long-term third-party engagement with Nintendo's platform as well.
Yeah, and justifies Microsoft's tactic of saying that they're going to go out and acquire a bunch of studios. Because if you want to make sure studios are making games for your system, one way to do that is to buy them. Which is akin to EA's move to buy Respawn Entertainment, which, as I understand, may have been triggered by a right of refusal clause in their arrangement with Take-Two. with Respawn, where they literally had to move to buy Respawn, or else Respawn was potentially going to be acquired by a different publisher.
Yes, it was the Korean company that publishes the Titanfall mobile game.
Okay.
Is the one that made a bid for them. And yes, there is a clause, or at least that's the report I have read as well.
Okay. And we're about to talk about the strength of mobile in this next segment. The only other thing I want to say with Nintendo, it very much surprises me that they reported that their digital sales are actually stronger than their physical sales on a system where, in my mind, you are heavily incentivized to buy the physical version of every game from a systems aspect. From a convenience aspect, digital may be better, but in general, and I know that buying the cartridge still winds up putting some content on your memory card, but it is not nearly the size of the full game in most cases. So I'm gonna correct that, because maybe I misspoke there.
Yep. That the sales for digital were their highest in our history. Not that they are eclipsing the physical sales, but for Nintendo themselves, that they're selling more digitally than they've ever sold before.
Yeah. Okay. I got that.
Right. I mean, which is different than saying it's in some cases, as we talk about other publishers, they definitely are, the digital sales are eclipsing the physical sales. But I think you're right in Nintendo's case that is not the case. And I think one of the other things that I saw consistently looking at other Japanese publishers, Nintendo, Square, Capcom, that the hardware, the physical versus digital divide in Japan was drastically different than what it is in North America and Europe.
Okay, gotcha. All right, let's get started with Activision, because there is a lot of stuff with Activision.
Yes, there is. Go ahead and dive into it, sir.
And I'm literally going to read a lot of this just to get through it quickly. So, first statement, Bobby Kotick, Chief Executive Officer of Activision Blizzard, his quote from the earnings call was, "This was another strong quarter. We delivered record results and impressive engagement." Now, you're going to hear that term, gamer engagement, almost more than you hear people talk about earnings in dollars. We delivered record results and impressive engagement with the recently released Destiny 2. You're also going to hear them talk a lot about Destiny 2, off to a strong start. King's position as the #1 mobile publisher in the U.S. Now, King is their is a sub-publisher that they own that handles the mobile segment of their business. Our release of Call of Duty World War II and the upcoming launch of the Overwatch League, we have great momentum as we approach the end of the year. Now, what I find interesting about this is if you go and look at their slide presentation that they had for the earnings call, one of the things we talked heavily about in our coverage of E3 this year, we mentioned that, wow, Activision's portfolio seems really light. And it is. Basically, on their own earnings charts, the only Activision proper, so not talking Blizzard and King, the only titles they list are Call of Duty, Destiny, and Skylanders. Their Blizzard subdivision lists 6 games: so World of Warcraft, Hearthstone, Diablo 3, StarCraft 2, Heroes of the Storm, and Overwatch. And then King, which is their mobile publisher, has 4 games: Candy Crush, Pet Rescue, Farm Heroes, Bubblewood. So when you look at that in aggregate, they've got a healthy portfolio. When you look at the Activision division, basically we're saying that Activision publishes 3 primary games in a recurring fashion, annual release. Well, not quite annual release. Call of Duty is still an annual releases, but in that format. Destiny is done by a third-party publisher, and I believe they do own the studio that does Skylanders. I'm not positive.
Yes, because that's Vicarious Visions, or it's Toys by Bob, which is again both studios under Activision.
Right. So to step away from the script a little bit here to talk about these PowerPoint slides, I also want to highlight when you talk about these divisions and who makes the money. Net revenues in the Activision division were $759 million. In Blizzard, they were $531. In King, their mobile division, $528. So their mobile division is making almost as much as Blizzard Entertainment. Once again, their mobile division is making almost as much money as Warcraft, Diablo, and StarCraft.
So is that the 3 months or the 9 month period?
That's the quarterly.
Okay, so and I've got the financial statements, the attachments here that do both the 3 month and the 9 month breakdown. That also kind of plays that out as well. And so in the 3 month way, last year Blizzard was very strong at looking at percentage wise, but this year because of Destiny 2's strong launch, that Activision of the 3, looking at segment income is how this breaks down for the 3 months, that 41% is Activision proper, 33% is King, and 26% is Blizzard. And so I think in part because Blizzard did not have a big launch of a game this quarter, but even if you look at the 9 month period starting with the beginning of their fiscal year, that's when it flips around. And this goes right back to what you were saying, Zeus, is Activision was at 25% of their total income. That Blizzard is at 38 and King is at 37. So right, you have Blizzard and the mobile division of King neck and neck for creating income for this company.
Yeah, and I'm sorry if I'm looking at the chart. I may have missed if you've quoted this number already, but so the other thing that I find highly interesting is not only is King a significant size of their revenue, but it is also it's also in the middle in terms of operating efficiency, and in terms of margin, it's actually their highest segment. So the operating margin for King was 39%, for Activision was 34%, for Blizzard was 32%, which tells me that King is making as much money as they're making and not spending nearly as much on marketing in other accounting line items. So they're clearing a lot more of that in operating margin than the other divisions are. So that's amazing, and it tells you why mobile is so big, because people are spending thousands of dollars on Candy Crush, right? So let's go back and continue running down. So Destiny 2, best-selling game console year-to-date in the U.S., significant. But again, when you hear the gamer dialogue, that gamer dialogue doesn't necessarily equate to Destiny 2. I haven't looked at all the nominations yet, but what I've heard in the dialogue from the media, when we talk about Game of the Year, we're mostly talking Horizon Zero Dawn, Legend of Zelda, a little bit of talk of Resident Evil 7, but I have not heard. I'm sure Destiny 2 is on a list somewhere in those categories, but I haven't heard it in the voice track. But financially, best-selling console game year-to-date. Call of Duty franchise still makes money even before the release of World War II. Pre-order momentum was good. Higher percentage of pre-orders on the digital offering than prior Call of Duty titles. So again, another indicator that we're starting to see that flip. But it's also good for the gaming, for the publishers in terms of their bottom line, because as I understand it, even though they don't talk about it a lot, they clear more margin on digital sales. I believe that while we argue that we should be paying less money for digital versions, that seems to be, but the game publishers don't agree with that. I think the fact of the matter, the tail of the tape, is that it costs them less to host their servers and pay for the bandwidth to deliver the games than it does for them to package physical copies and ship them all over the world, and to localize them. See what else. Strong franchise engagement, record and better than expected Q3 year-to-date financial results. This is now here's where we get into a big, strong theming of their report. Daily time spent. So they talk a lot about monthly active users, much more so than they have in previous years. Daily time spent per user of over 50 minutes in their online games, which they held up as a significant accolade. Activision Blizzard was recognized in the top 10 of the Fortune's Future 50 list, which is a subcategory and indicator category of incubation companies subordinate to the Fortune's 500. So these are companies that they're looking at that are either in and expected to get stronger or are expected to catapult into the Fortune 500 over the next coming years. Let's see. High attach rate and of the expansion pass to a lot of their Destiny 2 sales. Full game downloads for Destiny 2 were over 50% of console sell-through units. So again, going back to my earlier comment where I thought we were saying that Nintendo's majority of their sales were on digital. For this title, for Destiny 2 for Activision Blizzard, it's a 50-50 split. They are seeing half of that business converting over to digital download. Call of Duty, #1 console franchise worldwide for 7 of the last 8 years. And so that down year was last year. They're expecting, so in their future guidance, they're saying that they're expecting to get that back this year with the release of Call of Duty World War II. What's amazing to me is that they've continued to support Black Ops 3, which is like 4 or 5 Call of Duty iterations, 3 Call of Duty iterations back?
Yes, it was 2 years ago. It was 2015 is when it released.
All right, and I guess we already talked about this, right? $759 million. So they exceeded expectations across all 3 of those segments that we talked about: Activision, Blizzard, and King. The biggest deal: company stock price has rocketed 80% since the beginning of the fiscal year to this year. That is pretty amazing. So maybe it wasn't these guys, or maybe I didn't copy the note down. But I thought it was Activision Blizzard. It may have been EA. I think it was Activision Blizzard. But yeah, no, it was Activision Blizzard. So this is the biggest bullet takeaway of the whole thing. Activision Blizzard delivered a Q3 record of over $1 billion of in-game revenue with record performance year to date. So we don't like it. I think we've done like 2 or 3 episodes where we've talked about how much we dislike this move towards focusing on microtransactions. I called Activision out for filing the patent for basically coming up with a gambling addiction-oriented methodology for encouraging you to pay more for in-game microtransactions and purchases. This is why, because they're chasing a $1 billion whale. And that's 1 quarter. In 1 quarter, they banked $1 billion of in-game revenue.
So, but I think the piece there is also the strength of King, right? Is that's where you end up with the echo that we just had, but also that's where you end up with the those in-game sales. It's not just loot boxes in Destiny. It's certainly loot boxes within some Blizzard properties, but it's also how strong King is that when that is over a third of their overall, and it's 40% of their overall revenue, that's all in-game, for a free game, that is all in-game revenue. So I think that shows a real, you're right, they are chasing that. I think the other piece here, one of my big takeaways is not just the profit, but I know that I was reluctant and hesitant about the strength of Activision moving forward at the end of their fiscal year in terms of how thin the actual Activision catalog was. And we talked about this at the start of this conversation. But I think looking at this now again and comparing it with the end of the fiscal year, I think that the strength of Activision is that they have, it is in classic business terms, right? It is a strong three-legged stool, right? That in years when Blizzard doesn't have a big release, Activision has something. When Blizzard has a big release, Activision doesn't have to have as strong of a year, and then if you have a relatively stable market or still a growing market within mobile, you've got that ability to weather a lot of storms, and I think that that's where the surge of their stock price makes a lot of sense, because it of these third parties, they're in a pretty good spot.
Yeah. So I'm hoping your weathering the storm was not a pun on Heroes of the Storm. If it was, I'll compliment you and walk away. But I just want to go back to the breakdown and make sure that we talk about this $1 billion with some level of precision. So when we look at the breakdown, they made $1.6 billion in revenue, right, total. $1 billion of that dollars was from in-game purchases over the quarter. King's total revenue for the quarter was $528 million. So even if all of the revenue from King was all in-game revenue, that's still $500 million roughly that is being generated out of Activision and Blizzard, and most certainly driven by people buying silver in Destiny and eventually Destiny 2. Whatever microtransactions Blizzard makes out of all of its MOBAs and online multiplayer games. So, that's 2/3 of their business revenue right now that's being generated by in-game revenue, and at least 50% of that is coming from, I guess, what I would refer to as the core gaming business that we kind of all grew up with, and the other 50% of that is being generated by the mobile. Yeah, go ahead.
No, I was just going to say, I think that if you're ready, that is a great segue into their big competitor in EA, because that their mobile, and not their mobile, but their in-game and microtransaction sales are also dwarfing the physical and what we have considered kind of traditional sales as well. So should we dive into EA, or do you have anything else you want to talk about within Activision?
I'm ready to dive into EA. Am I taking this one, or are you?
Go ahead. You can start us off.
Okay. So my notes, at least on this, are like a third. It's funny. This is the company that made more money, but the notes are shorter. EA also reported a notable shift in sales towards digital, especially for sports titles. Digital net bookings for the trailing 12 months was $3.24 billion. Now that's over the year, up 26% year over year, and represents 63% of their net bookings for the same period. So they've hit the tip over point where roughly half of their business revenue over a year is now being generated by digital sales. They talked about 50% of their Madden NFL player base is engaged in the long shot story mode, which I guess it hits points of invoking microtransactions, and that's a 25% increase year over year. Battlefield 1 community, again, there's a heavy focus on their financials, talking about their player base and almost less so about the money generated. Battlefield 1 community grew to more than 23.5 million players worldwide. That to me was significant. And I'm sorry, I said they made more money. I was looking at that 1 year line rather than the quarterly line. So their revenue was about $1.18 billion, so less than Activision made. They are expecting net bookings over the whole year at $5.15 billion, which will have them coming in underperforming. And their total net stock gain over the past year is 50%. Again, their stock price did take a hit when their earnings reports came out, because they are right now their forward-looking guidance has them coming in lower than expectations. So not as much to report with EA. I feel like they have a larger portfolio than Activision. They are just as heavily invested in pursuing these recurring player investment payments, but not a ton to talk about. And I think that's because EA is perhaps the publisher because they are so heavily invested in sports titles and Madden itself, and they don't have a Battlefield title coming out this year. They're a company that's definitely kind of done by this point in the year, and so there's not as much activity to report against in this third quarter of the calendar year.
Yes, let's make that point, right? Because this is the week that the literal everything is hitting the fan for EA in terms of not being done, in terms of potential sales and potential flack over those both digital transactions and physical sales. I want to go back to some of your points, both for clarification and also to kind of come back with a couple other additions. So I think there are, you did talk about the Madden long shot. They talk about 50% there. I think that there's not a DLC or microtransaction packaged into that. I think to me as a player that's a nice piece because that was a new mode. That was their story mode, right? That was their journey. What they do talk. Go ahead.
That's why I asked real quick. Are you sure about that? Because one of the big trends that we've seen changing throughout this year is that more and more so those career modes are where you're hitting points of wanting to buy shoes, things for your apartment, training sessions, things like that.
You're getting us to take two before we're ready to get there with NBA and my career. But no, so I think in that same sentence where it talks about 50% of people engaging with long shot, it then also says that the Madden Ultimate Team players, and that's their buying card packs to get players, to get contracts, to do your basically your fantasy team and play against other people, or that's where the money investment comes, and those players are up 25% year to year. So that's where they're seeing the growth. I think the long shot mode probably is only mentioned because it was a new mode, and it potentially what I think it does is it brings in either lapsed players or people that may feel intimidated to dive into Madden, and so the story mode maybe gives them something that they haven't had in the past, which if they can show if they can convert those players into the ultimate team and kind of funnel them in there, then that's where their microtransactions end up happening. So, and I think that the digital aspects here, you talked about it, that a story or some of the analysis here is that there is, it's 70%, it's almost a 70-30 split in terms of digital to physical for EA. And I think that is a key piece there. I think the difference here in terms of some of the net bookings from looking at Activision to EA is the breakdown between console, mobile, and PC. Where in Activision's case, they were relatively, PC was a little low this year, but console and mobile were relatively hand in hand. But in EA's case, looking at both quarterly and over the last 12 months, mobile is at the most, it's only 9%, 6% over the last year, where console there's still a console heavy platform with 35%. So I think that is a place there for EA. I think the other piece with their net bookings that I find, definitely ties into the loot crate and loot box news stories of this week are their net bookings by type, right? Breaking it down by full game downloads, live services in terms of microtransactions, and mobile. That full game downloads still account for still have seen good growth, that it's 55% growth. But if you look at the overall sales of game downloads and microtransactions and services, that microtransactions services, the live services aspect, accounts for 56% of their year-over-year revenue, or their year-over-year net bookings. And so for all the conversations that have happened around EA in the last month with Visceral and with the, kind of investor statements about moving this kind of constant engagement and reoccurring charges into games is very much because that's what the numbers show, right? If their revenue is over 50% based on in-game microtransactions, just like Activision, there's a pretty sizable whale that they're chasing.
Right, and we this isn't our news show, although we're doing the financial breakdowns. We might get to it on this Thursday news show, but there's definitely been additional breaking news about the whole thing of the shutting down of Visceral. One thing that definitely got pulled to light because of their purchase of Respawn is the fact that Respawn was also working on a Star Wars game. Not quite sure how an individual dev shop pulled that deal, or whether it came through EA. But either way, so one thing to consider is that you had two studios working on a game in the same canon, and so you had two things to compare. And it sounds like that may have played in. The one other thing of note in that is, and I hadn't considered it until I heard some of this news today. Amy Hennig is a writer, and to a certain extent, maybe a creative director. She is not a software developer. So there's a difference in kind of the DNA of the leadership between those two studios. So how many more companies do we have tonight? One more or two?
We've got as many as we want to keep going on. So I guess that is the question here of do we keep on trucking and move through here and maybe skimp a little bit on our playlist because we've got a couple others that we might want to hit on. I think we could probably skim over a couple of the softer ones and maybe spend another 8 minutes to try to round out the hour on financials. How does that sound?
I'd definitely like to hear about Ubisoft and Take-Two. I think were the ones, and then we could probably each do our playlist in like 1 or 2 minutes apiece.
Yep, that sounds good. Well, let's go right into Ubisoft since we did talk about that a little bit before in terms of the breakdown in terms of strong Switch sales comparatively with the other major platforms. I think some of the big takeaways here that they talk about in their earnings report is first half sales are up by over 65, almost 66%. That their digital revenue, again, going back to that consistent drumbeat there, is up by 69%, and their back catalog sales, which kind of what we talked about with Microsoft, that those are up almost 48% from year to year. One of the other things here within this last quarter, or the first half of the year for Ubisoft, is that their net income is up over 33%, and that they are currently within year to year, they are at a 66% profit increase. So again, they're still just like EA. They're in a loss. They're operating in a loss, but they are not nearly doing as badly, right? That when you were looking at a 66 million loss versus a $20 million loss, it sounds pretty good percentage-wise, but you're still operating at that loss. But once you start adjusting for net income, that their adjusted net income is up by almost a third from this first half of the year compared to last first half of the year. So in Ubisoft's way, a lot of their marketing and kind of messaging around their financials has been relatively strong. That they've seen a long tail in terms of DLC content within things like For Honor and Rainbow Six Siege, and now with what should be a strong launch of Assassin's Creed Origin, that they're looking at a relatively strong year. So we can keep on moving on. We'll skip over Capcom because there's not a whole lot there.
Let me jump in with two quick comments on Ubisoft.
Yeah, let's go ahead and do that.
So I have some issues with Ubisoft creatively. We talked a bit about how all of their franchise kind of look and feel the same, but the thing that I'll say is one argument for why do you do annual releases on so many of your franchises is because of what you mentioned, revenue being up in back catalog. Because maybe those games don't get bought in that first 30-day release window, but maybe lots of people go out and buy them over the years following their release. The other thing I'll say is their margin and this is speculation, I'll hazard a guess, I wonder, and I feel like that might be due to their approach of managing their development teams in terms of maybe keeping total headcount lower than it might be with all these other publishers and companies saying that you have to have these huge, massive teams and massive budgets to get out a AAA game. One of the things that I will admit in the past I've joked about it in a criticizing manner, but when you look at an Ubisoft game and the credits roll, like every Ubisoft studio works on every game. But I think that's because they are putting talent at these individual student locations. And one thing that I do know, because I read a few years ago, they have one of the best systems for sharing talent. So when a studio is working on something and they need extra art help, or they need extra, graphic, GPU optimization, things like that, they don't necessarily go hire a brand new FTE. They post it to a board. If that talent is light loaded at another location, then they figure out ways to work remotely and share that talent. So that might be helping them keep total headcount low and benefiting their margin.
Yeah, I think that's a really interesting piece, right? Because of being a European company, that the whole organizational management aspect of that is different than a North American, different than a Japanese business company, and so it lends itself to a different approach. So let's come back to that idea of recurrent customer spending and talk about kind of our last big one here with Take-Two. Do you want to go ahead and start with Take-Two?
Yeah, that's all you, though. I didn't pull threads on Take-Two.
Oh, well, then I'll go ahead and get started on Take-Two then. So again, the big drumbeat for Take-Two is microtransactions, right? Within one of their statements, they say the business once upon a time was a big clunky opportunity to engage for tens of hours or perhaps hundreds of hours. This has turned into, so this is CEO Strauss Zelnick from Take-Two. This turned into ongoing engagement, day after day, week after week, right? Microtransactions, in-game spending, and so, and this is what we see played out with Ubisoft. Maybe not so much with Ubisoft, but definitely with EA and with Activision, where their recurrent customer spending is 42% of all their net bookings. So it's not quite at the same level of EA and Activision in terms of their in-game transactions, but again, that it is a huge part of their business model now, and they're seeing, and in part because of that, they've seen a 66% year-over-year increase in terms of income. They're still at an operating loss, but again, a much smaller loss, where we're just talking about EA and Ubisoft, their loss is only $2.7 million in net profits. So it's quite a bit different from last year at this time, when their operating loss was $36.4 million in profit. So again, that is a pretty significant piece, and those microtransactions accounted for 48% of their revenue for this quarter. So not only the year-to-year aspect, but this quarter, it's almost half of Take-Two's revenue. And so that includes things like we've been talking about already, things like in-game currency for NBA 2K, so you can buy new sneakers and upgrade your haircut, and other things within your My Career mode. The continue month after month strong sales of GTA, and the in-game spending on GTA Online, that not only, GTA, the revenue within GTA Online, there was a news story last month about how that has now surpassed the revenue of GTA 5, the actual game, right? So that is a key piece there. I think another piece within EA, or within Take-Two, is that they also do have a strong, they have a strong, I'm trying to think of the mobile market, right? Because they do have some mobile sales. They've got some of their WWE Supercard and other places where they've seen some strong microtransaction and recurrent spending sales there. So I think one of the, going back to GTA, that they show here, and this is what GTA came out in 2013, 2014 maybe for next gen consoles, that this is Grand Theft Auto's Online. It's their best quarter ever. So we are 3 years out with Grand Theft Auto Online, and Grand Theft Auto 5 year over year has continued to grow, and the revenue from that still has not peaked 3 years out. And I think that for the conversations that I've brought up here within the news about games like PUBG hitting 2 million concurrent players, right? We're seeing that. We still haven't seen that peak, but that's only been within months. This is 3 years worth of continued growth within Grand Theft Auto Online. And so I think that is a big piece of Take-Two's, and they've come out within this statement as well and said that all games going forward will have some opportunity for recurrent spending, right? We aim, here's Zelnick again, right? We aim to have recurrent customer spending opportunities, opportunities for us. That's so nice of them, for every title that we put out at this company. It may not always be an online model, but it may not always be a virtual console, but there'll be some way for us to continue to engage and give them our money. So I think that is a real statement of kind of where some of these big publishers are at. And it's also for all the hate that's been thrown on the internet over the last 3 days for EA, companies are doing this because that's where the money trail is, right? That this is not something that they're chasing because it's a new market. We've already shown that we'll take that behavior. They're just now responding to it.
Yeah, right. And that's kind of the context I wanted to articulate it in. Just like, if you're mad because these companies are converting to that business model, they're converting to that business model because you're buying the content, right? They're not doing this just magically of their own accord. They're doing it because what they're seeing is that it's what people will pay for. We have a new generation of gamer, and I think a lot of that gaming demographic are the people who buy a limited number of games, and what they primarily do is they have one game, maybe two, that is a community-oriented game, and they dive deep into that. That's what they're on Twitter about all the time. That's what's on their Facebook page. That's what they're live streaming. That's what they're doing game captures of. It's I play Overwatch and Destiny, or it's I play Overwatch and Heroes of the, or whatever. And because they're not buying a new $60 game every month, that's a single player campaign, they're spending their money on that one game, on in-game purchases. So yeah, great reports, DB. A good episode. The only thing I wanted to mention about Take-Two is I think they're the only one that I really saw in the publishers that we talked about that had buried in their earnings report a bit of a reveal on things they were working on. They mentioned that they are working on another, I think they said another familiar franchise release for next year. So speculation right now is that it's either Borderlands or BioShock. We don't know which one. I think Borderlands definitely lends itself more so to microtransactions than BioShock would, so we will wait and see.
Yeah, that was definitely out there. That was one of the things that was trickling through the news last week as well. I think the Square release did have some teases about what they're projecting for the rest of their fiscal year, but that's, I think Take-Two kind of gave us some of that tease there and speculation. So let's we've got a few minutes here. We are past our hour mark, but we knew that this was going to be a meaty episode about numbers, and maybe people have stuck with us this long. So what have you been playing, sir? Let's go quickly through some of our stuff.
Yeah, and my only wrap-up note is I know people would want to hear about Bandai Namco, Capcom, Sega, Square Enix, Warner Brothers. We tried to cover that, just didn't have enough time and bandwidth. So what I've been playing, I've been playing a ton of stuff, but most notably I played a couple hours of Skylanders Imaginators this week. Got a little demoralized because I kind of scrolled down the list and saw all the remaining chapters, and despite the amount of time I've put into that game, I'm really nowhere near being done. So I'm not sure exactly what that's going to incentivize me to do in my approach to Skylanders Imaginators. I had one question for you, because I haven't been absolutely clear. Am I only able to play Skylanders that I have the toys for?
Yes.
Okay.
Yes, you may, so in some versions you may be able to get, the default Skylander, or, that was some of the case for some of the mobile versions. Okay. But in terms of, you are only able to play the characters that you own.
Right. Now, how do you create new Imaginators? Do you know what's required to do that?
So in an Imaginators aspect, man, this is okay. So I looked at I have not played Imaginators since the day after Christmas last year. So you get a crystal that allows you to create a character, and then if you want to create additional characters, you need to, guess what? Buy additional crystals.
Gotcha.
So that is where you're locked into that one create a character.
Okay, so I do have a crystal that I haven't used yet. So apparently the kit that I bought will allow me to play the 2 pre-made Imaginators that I would have access to, and then to create one. And then I guess I could buy additional crystals. I'm wondering if you can buy virtualized crystals, because they mentioned a smartphone app that you can use to do your Imaginator creation on the go and then like sync it back or something. I'm wondering if it would make sense if they were going to have that they would have in-app purchases, which we just got to talking about. But it would be nice if via the app I could buy creation crystals. So I would have to go to this, because I don't need a bunch of Toys for Bob crystals sitting on.
Yeah, it really is. It's a plastic crystal, right? That doesn't really do anything. So. Right. There's no incentive there if you could do that. That's an interesting question.
Yeah, so I'll check that out. But yeah, that's what I've been playing. Nintendo Switch, we're going to talk about 4K TVs and Xbox One X Scorpio and PlayStation 4 Pro sometime before the end of the year. We're not going to do it tonight. Nintendo Switch on a 4K TV, not so great. It's not horrible, but I don't really. It may be worse than it looked on a 1080p TV. So I may be switching some things up. My current setup, because I did keep a 1080p TV in here when I brought in the 4K TV. The other thing that I've been playing is Titanfall 2. So this is a game that released last year in October, and I played it. This is the game, unfortunately, that generated a lot of questions about the purchase of Respawn, because for whatever reason, EA decided to release it in the week in between Battlefield and Call of Duty. Critically acclaimed, maybe not acclaimed, but critically positive reviews for the single-player campaign. And unfortunately, a lot of people missed it. I missed it. I didn't buy Call of Duty last year. I did buy Battlefield and Titanfall 2. Titanfall 2 kind of didn't get a lot of playtime because I maybe spent more time on Battlefield. But I did play that game on PC, brought it back out of mothballs and out of the backlog. Great fun. It's a very busy game. There's a ton to do and a lot to master in terms of even just your foot soldier mode. The realization I made this week is that I realized it plays a lot like Crysis 2, and we all know that I love Crysis 2 because it empowers you and it kind of makes you feel like a hero, and you have lots of different tools in your toolkit. Almost near overwhelming, those number of tools that you get right off the bat, because the difference is in Crysis 2, you kind of earn your way through up to those tools. But I really liked it. It has 4K assets in it. A lot of my theme from now to 2018 is going to be, what does 4K gaming look like? So it does have 4K assets. It's not SLI enabled, which is becoming a recurring theme that really bugs me with modern games that don't allow me to take advantage of the hardware in my primary gaming PC.
So you played this on PC, right? So not on the Pro or the X?
Correct. Right. Yeah.
Okay. Okay, because there was a Digital Foundry article last week about how some of the assets in Titanfall 2 on the X were not looking as something wasn't running right compared to the Pro. So that's why I was curious. But yeah, Titanfall 2, great game. This time last year, I was knee deep in Titanfall. I played way more Titanfall than Battlefield, and just love the movement aspect of that.
Yeah, no, I played Titanfall 2 multiplayer last year, but didn't play much of the single player campaign. So I'm trying to get back to that now.
It's a good campaign. Yep, love that campaign.
Opposite on Battlefield, played more of the single-player campaign. So you have been playing some newer games.
Yes, so I am 18 hours into Assassin's Creed Origin, and still just, it is a nightly visit back to ancient Egypt. So I won't talk too much about that, because the other game that I have been playing over the last week is I have a subscription to EA Access, so I've had Star Wars Battlefront 2 to play around with, and so I could spend a lot more time than the 2 minutes that we have to talk about this. But so here's my quick takeaway: is the night that I could play it, I dove in and devoured the first 3 because you only get 3 story missions of the 12. So there's 12 story missions. I played the first 3 and was done within, an hour and a half. I had just under 9 hours left of my 10-hour trial. Loved it. It was great. It was fun. I can't speak to the rest of the campaign. It sounds like some people are enjoying it. Some people, are having some concerns with it. But as a Star Wars geek, it's pretty interesting. Then I didn't touch the multiplayer for days because I was soured by the beta and the loot box piece. And to me, I think of all the loot box hate that's been slung over the last week, and this is the one thing I do want to say, is that I think the argument is in the wrong, the uproar is in the wrong direction, right? So yes, you have to wait to unlock Darth Vader, no matter if he's now 15 or 60 credits, 1,000 credits. It's still just a character. The bigger problem with the loot boxes are the upgrades and buffs to troopers, to starfighters, things that give you a 10% target acquisition lock-on faster, or the availability to shake a target, or to heal health regen faster, right? And so that starts at maybe 5%, but then as it moves up in rarity, you can go up to 25% or even further. And so that becomes, those cards really affect the competitiveness of the game, rather than just the fanboy hero-ness of playing Darth Vader or Luke Skywalker. And I say that as a fanboy, but I think the bigger problem, and the thing that's kept me away from the multiplayer until just last night, was this issue. So last night I did play some Starfighter Assault, the fighter mode, and a couple matches of the multiplayer Galactic Assault and both strikes. The Starfighter mode is fun. This is Criterion, so they nailed it. It is intense and flying through debris and asteroid fields, and I'm loving it, even if there's some flaws in the star card system. The multiplayer, the on the ground trooper multiplayer, if you enjoy Battlefield 1, it's basically the same stuff. Yes, there's other problems, but what I'll say is, after playing a couple rounds of the on the ground trooper multiplayer modes, I closed it down and I fired up Destiny 2 for the first time in a month and a half and played 2 matches of the Crucible. And I think there are more engaging, there are deeper and much stronger multiplayer competitive shooters out there, if that's what you're looking for Battlefield for. If you're going in for a Star Wars fix, sure.
Is it worth it if the only thing that I get out of it is basically a decent multiplayer space sim, if I just play it in space fighter mode the whole time?
Oh, that is the argument that I am wrestling with right now, because I know that the campaign is only going to be 6 hours, and then is it really? Am I going to get enough out of the Starfighter mode? And I think the answer for me is yeah, probably, because I really enjoy that mode. Should I spend day one prices on it, or should I wait for the eventual discount that comes around the launch of the release of The Last Jedi movie? Or other holiday sales, and then there's a piece of me that says I shouldn't pick this up until it's free on EA Access, because for all the complaining that I have about the Star Card system, if I still buy the game, I'm still giving them my money. And so that's the back and forth that I'm having about this. But it's Criterion did a great job in terms of putting together a good Starfighter game.
Yeah, the thing I love most about it maybe is that means Criterion will be occupied doing backup on the Star Wars franchise, and will hopefully keep their grubby fingers off of my racing games. So I have not heard astoundingly great things about Need for Speed Payback just yet, but I'm still interested in it. Not just, but because I know Criterion didn't work on that one, or at least wasn't the primary developer on it.
Yeah, right. Yeah, I played a little bit of that and bounced off of it. So, take that for a grain of salt. But anyhow, I think we have covered a lot here in our hour and 15 minutes. There are a lot of I think our what we're playing ties directly into our financials, whether it's Respawn and smaller developers being picked up by big publishers, or it's the realities of the marketplace and recurrent spending and microtransactions. So that is something that all of us will be thinking about and talking about, and I'm sure that we'll come back to some of those topics. And for our news show on Thursday, it's going to be hard to avoid some of the news coming out of the Battlefront series this week. So this has been episode 22. We will be back here on Thursday for E2KG and 30 for more news and more gaming discussion. But for Iglesias Stamos and myself, DBq Hams, thanks again for watching, and please give us some comments, give us some thoughts. How's your armchair financial quarterbacking going? Did we miss some things? This is a good topic for us to talk about, but we want to engage you in that conversation as well. So until next time, we're always going to be enough to keep going.
Yeah, and keep up with us here through the end of the year. We will definitely be doing some type of Game of the Year thing. And then at the beginning of the year, tune in when we come back after the break and talk about the year in review for 2017.
Yes, great plug. We've got a lot of end of the year content coming up as well. So thank you, sir. Any other final notes before we kick this off?
Nope.
All right. So until next time. Good night.